I think DAOs are completely overrated and most of them are BS. Most of them are like three people calling themselves a DAO, but really all it is a group chat of people trying to figure out what the fuck to do.
All right, welcome back to the Exploring the Blockchain podcast, where we document our experiences of learning about the blockchain, interview guests and experts in the space, and keep you updated on the latest trends in the industry. I'm your co-host, Zane.
And I'm Josh. Today we're joined by our great friend, Jai Bhavnani, who's going to discuss his thoughts on crypto, decentralized finance, and the broader blockchain industry. Thank you so much for joining us today. Can you start by telling us a little bit about your background in the crypto industry and where the whole journey started?
Yeah. Hey guys, thanks for having me. My crypto journey started back in 2016 when I was working for Sean Parker's newest startup, and I was basically doing mobile development for his company. And one of my coworkers says, "Hey Jay, put all of your money into Ethereum." And I was like, "Hell no, that sounds like a Ponzi scheme. I'm not doing that." Then a couple weeks later, I read about Ethereum on Hacker News, and I'm like, "Oh, this is what that guy was talking about. Like, let me read about it and see at all if this is interesting." So then end up reading about it and getting semi-interested. I would say about 80-90% of it went completely over my head. But the part that did resonate with me was super duper exciting. So then I put a decent amount of money into Ethereum. Now this is late 2016, early 2017. And then it doubles. And I'm like, holy crap, I figured out the stock market, mom and dad. This is sick. And then after it doubled, I'm like, I'm just gonna put all my money in here because I figured out the secret to the stock market, right? And then it doubles again, and I'm like, oh my god, this is really cool. And then continue to go deeper and deeper and start to actually learn what this technology is because all my money's inside of it. And then at the time, ICOs became a thing. So I start trading ICOs and basically buying into all of these tokens as the tokens come out, and thought it was a lot of fun. And during this time, everybody sees people making 100%. There was like the famous New York Times article. I'm like, yeah, everybody's making money and you're not. Here's how to invest in tokens. And the issue was that Coinbase had 3 assets at the time, and most exchanges had very few assets. And people wanted to participate in the opportunities that most others couldn't. So built a mobile wallet that made it super easy for anybody to invest in cryptos that weren't offered on Coinbase. End up launching that, ends up being acquired in early 2019 by a company called MyCrypto. Stick around at MyCrypto for a little bit, advising on strategy and DeFi. End up leaving, starting Rari Capital, starts as a yield aggregator, then pivots to a lending and borrowing provider, grow it to about $1.5 billion under management, and then at the end of last year merged in with the TribeDAO, where I stick around and was working as an advisor, and now I'm working 100% in a venture studio called Pentagon, which I've started about 6 months ago, a little bit more than 6 months ago, where we get to build protocols and decentralized technologies.
Yeah, that sounds amazing. Thank you so much. I would love to hear more about what you're doing right now, but can you tell us a little bit of what is a yield aggregator, what is Rari, and why were you so passionate about building this?
Yeah, great question. So I think the easiest way to start answering this question is first by getting into like, okay, why is DeFi important? And even simpler than that, what is DeFi, right? And the simplest way to think about what DeFi is it's finance on the blockchain, right? Why is that important? Is because you don't need to trust people, right? Usually, let's say me and Josh were going and making a trade tomorrow, right? And I had to give him one let's say Apple stock, and he had to give me one let's say Google stock, and we were making that trade, right? Usually we'd need to trust somebody to make that trade for us, right? There's always a counterparty. We'd probably both give our stocks to Zane, and then once Zane gets both of these stocks, then he would make the trade and we'd each get the other stock. But in that, the problem with that is that you need to trust Zane. On a macro level, we're trusting institutions to hold billions of dollars, and sometimes they break and sometimes they fall. And crypto is a way to remove that middleman and remove Zane so that me and Josh can just trade however we want with no limitations, right? So this started with trading, and then it moved to borrowing and lending, right? You don't need a middleman to borrow and lend. You can just borrow and lend between two people, and it's secured by the blockchain, and you don't need to trust anybody because you're trusting code on the blockchain, right? So this was pretty powerful. So with the rise of tons of borrowing and lending platforms, right, like Compound Finance, Aave, DYDX were the biggest ones at the time. There was places where you could go and lend your US dollars and start to earn yield, right? 7% on some platforms, 3% on other platforms. And having just come out of the My Crypto acquisition, I started to go and lend my money out using these DeFi platforms because I didn't know how to do it in traditional finance. So start lending it out to all these different crypto avenues, start earning yield on it. And I have to move the assets every single day to earn the highest amount of yield. And then I'm like, I'm sure that there's a way we could automate this. And that's what a yield aggregator is it's a way to automate how you're earning yield in DeFi, right? Usually through borrowing and lending platforms. Now there are a few other ways to earn yield, which we can get into. And that's what Rari was in its first iteration, was just a yield aggregator. Then it pivoted into becoming a borrowing and lending platform, right? We had started by aggregating everything. Then we started doing what we were aggregating, which was borrowing and lending. What made our borrowing and lending marketplace different was that we made it so you could borrow and lend any asset, so that nobody could tell you what you could or couldn't borrow and lend.
So when you say any asset, does that specifically refer to something that can be put on chain? People know about the Oracle problem, this idea of a hard time of putting physical assets on the chain. So this would just be digital assets, things that you can verify on chain, right?
So it's anything on chain, right? I think that like we as a society will inevitably move towards every single thing being on chain over the next 30 years. I think that's pretty inevitable. And in a world where everything is tokenized, Fuse lays the foundation for everything to be lent and borrowed.
Great. We'll get into Fuse more. Can you briefly explain where this yield comes from? And I know one of the reasons why people believe some of these more pyramid schemes like Anchor Protocol was because they say the 17% yield or 40% yield, but they don't explain where this comes from.
Yeah. So, okay. Basically, yield is always coming from somebody else. That's the first thing to acknowledge. That doesn't mean that it is a Ponzi scheme or something suspicious, right? That's how the banks work, right? So in this example, we'll go back to me and Josh with Zane as the middleman, right? Let's say I have $1 million and Josh needs $100,000, right? I would give my $1 million to Zane, and Zane would probably give $100,000 to Josh, $100,000 to somebody else, $100,000 to somebody else, until actually more than my capital has been deployed, because banks can do that, right? So now everybody's trusting Zane, right? Josh is trusting Zane to give him the money. I'm trusting Zane that I'm lending to him, right? And I'm getting interest, but a very small amount of interest, because Zane gets to keep the most of it because he's doing all the hard work. What crypto lending and borrowing platforms do is turn that upside down and cut out the middleman. So I can lend directly to Josh, and Josh is paying interest when I lend to him, and that interest is going directly back to me, right? So this yield that is being generated is because somebody like Josh is paying for it because they want to basically borrow or rent the capital that you're providing, right? That is it can be artificially inflated at times, and there are sometimes people that make it look and just make it super suspicious, like Anchor and Terra protocols, right? And what happened there is they synthetically increased the interest rate, and people weren't borrowing at that interest rate, so that means that they needed to supplement that capital somehow else, and they didn't have a source of doing that was sustainable, which is why it collapsed. But pure DeFi doesn't need that. Pure DeFi is transparent as it's as transparent as you can get, and it's as powerful as you can get.
And I think what's also special about what you're talking about is not just that it's cutting out the middleman, it's also empowering the average consumer to lend out their money, to earn interest on their money. In traditional finance, as you mentioned, where does one go to do that, right? There isn't a straightforward option out there. It's always the institutional investors. It's always the banks who are doing that type of thing. So I think that that's really special, and that's something that's really cool.
I mean, like even on that, right? It's like you go and deposit money into your bank, and how much in interest are you getting? Like 0.0002%, right? Let's cut out the banks and let's get more interest for everybody.
You mentioned a little bit about Rari Capital. What is Fuse, and how did that interact with Rari Capital?
Yeah, so Fuse was our biggest product by far, right? I would say that our yield aggregator never really got product market fit before Fuse launched, right? What Fuse did is, like, in this borrowing and lending landscape, right? There were always pools where you could borrow and lend, right? So instead of Zane being this middleman, right, you had a pool of assets which anybody could lend and borrow to, right? But it's important for the pool to stay healthy, or else the pool can collapse. But what that meant is there were people and groups of people and token holders who basically blocked certain assets and blocked certain people from the pools to keep it healthy. Fuse made it so that anybody could start a borrowing and lending pool on whatever terms and whatever assets they wanted. Right? That was extremely, extremely powerful, because now what you could do is you could borrow and lend anything, and nobody can tell you you can't do that, right? Because you can just go and start your own pool. If I want to go and borrow $1 million in Shiba Inu coin, right? Aave is not going to let me do that, because that's a lot of risk that Aave or Compound need to go and underwrite. Whereas I can go and create a Fuse pool and start doing that right away.
I think the idea of liquidity pools is interesting, because in traditional finance markets, when liquidity dries up, you have big banks and big institutions that can come in and ensure liquidity, and that people are able to withdraw money. In the current markets, you've seen companies like Celsius pausing withdrawals. You've seen a lot of near insolvent companies. Do you have any thoughts on what's going on right now? I think what's cool about crypto is it's this like libertarian society in which you're putting your money into something, and then if it falls, it's basically on you. Do you have any thoughts on what's going on right now, and how we can prevent this type of thing from happening in the future?
Yeah, I have a lot of thoughts on what's going on right now. But long story short, it's just showing why DeFi is important, right? Celsius, BlockFi, all of these guys, none of them are DeFi, right? They're centralized institutions doing centralized things, right? If they were DeFi, people would be able to see what's happening on chain, and they'd be over collateralized, and it would be like impossible for them to go insolvent, right? So I think that this is the biggest sales pitch that DeFi has ever had, and continues to show why DeFi is probably and possibly one of the most important innovations of our lifetimes.
Jay, you talked to me. We had a great coffee chat in front of a Starbucks, and you explained to me that you don't think the best way to be educated in crypto is through a class. You said, Josh, get Twitter, follow everyone I follow, and learn that way. You'll stay the most up to date. And I used that, and I learned way more from threads than I probably could have a single class. Still believe that in education, what's the best way for people to learn about crypto if they want to?
Yeah, it's an interesting problem, and it's a pretty tough one to navigate, right? Because even people on this new team that I'm putting together, right? It's like they've been in crypto for a year, maybe 2 years, and they still have no idea what the hell happened those 2 years before, because nobody's writing this stuff down, right? There's no one history, and there's so much going on at any given time, right? Some people say that a week in crypto is a year in the real world, right? Because it acts that fast, right? Like traditional finance, how many big things happen in a week, right? Versus how many things that equals 1 hour in crypto, maybe even less than 1 hour in crypto, right? So how to stay up to date is really just by figuring out who are the people who you want to listen to, and curating a very, very powerful information stream, right? I'm pretty proactive about who I follow and don't follow on Twitter. I've been giving myself this challenge of unfollowing one person per day, just so that I get to the ideal state of my feed, because it both educates me on what is happening, so I need to follow the people who are publishing the best pieces, but it also impacts my point of view subconsciously. So I think it's really important to just be mindful of all of the information sources that anybody is monitoring and reading.
Jumping around a little bit, I want to ask you about your decision. This was a while ago, but I saw it on Medium, which was donating 50% of protocol revenues to charity. I want to get your thoughts on using crypto as this vehicle for change. And I think the exact wording was an autonomous philanthropy machine. I really liked that idea, and I was hoping you could talk a little bit about that.
Yeah, there's a lot to unpack there, but at a very high level, it's just a lot of crypto is sitting on vast sums of wealth, and we also have the opportunity to innovate how crypto at its base is a capital formation vehicle, right? It's a new way to move capital, right? And charities and just nonprofits more generally need capital, right? So if we're innovating on the rails that capital is controlled, it is it is inevitable for charities to be a piece of that discussion and to be innovated as a byproduct of our innovations in capital direction. So I think super interesting. We tried that, and I am excited for all of the other experiments that's going to happen in capital direction that affects charities and nonprofits more generally.
Jay, you explained Rari Capital Fuse. What's next for you?
Yeah, so right now I'm focused on Pentagon, right? And Pentagon is this venture studio where we do two things, right? The first thing that we do is we build protocols, right? The protocols that we build are very different than the protocols that you see today. They don't have token holders, they don't have governance, they don't have value capture on chain, right? These are immutable things that will live on the blockchain forever, right? Nobody monetizes off of these creations. They're basically public goods that are innovations in one of a million different ways, depending on what idea we're talking about. The second thing that we do after we build these public goods is we go and build companies that use these public goods to go and do what they want to do and do it better than they could otherwise. Right. So the first example of this is we built this primitive, which is super interesting, called a DPD, or decentralized programmable data. And it's basically this idea that you can have data on chain that's governed on chain, right, by a contract or by a person. It's basically like an NFT that you can assign somebody else the ability to edit. And that data doesn't have to just be an image, it can be a website or anything. So the company that we're building on top of that hyperstructure is called Intrago. And it's basically Vercel, the DApp deployment tool, but for dApps, which is I'm really excited about this because it makes it so that you can start thinking about dApps themselves in the front ends as hyperstructures and just start thinking about the lens of the front ends that we access and the internet more generally through a whole new context.
So, obviously, you're a founder. You're building so many great things. How do you manage work, school, and also your mental health?
Yeah, I mean, I always say this one thing, and I genuinely believe it, that if you want to be a founder in any industry, but specifically crypto, you need to like be a certain level of crazy, right? And like, I don't think you're ever gonna achieve a perfect mental health balance ever. Just being a founder in a volatile space and running a startup with the amount of different fires and things that you need to put out on any given day. That said, right, you can get pretty close to it, right? And I'd like to think that I'm pretty close to that ideal state. And I think that it's about building a great team around you. It's about building support systems on both a personal and professional level. And it's about building a bunch of just different vehicles that can support you during tough times and great times.
Do you go to classes, and have you found them at all useful to your yeah, have you found them at all useful for anything?
I've not been to classes in a long time now. I went at the beginning of last year and then kind of just dropped after a while. Next year I'm enrolled in one class. So we'll see what happens there. I don't know. I think some classes are pretty interesting. The class I'm enrolled in next year is financial derivatives, so I'm pretty excited about just learning about that because I've only studied theory. I've never really studied what's actually happening underneath the hood. So I'm excited.
Yeah, yesterday we actually just had a talk with Professor Vincenzo Quadrini, who's teaching a DeFi class on USC, and he comes from a very traditional macroeconomic background. So it was interesting to hear his thoughts on where the industry is going.
I want to add to something you just said. There are some great. Well, they're adding more like blockchain classes at USC, especially in the business school. Do you have any thoughts on? Well, you said that that's a little slow way of educating, but is it still a good way to like teach people who need to know this stuff?
I mean, I don't think so, right? That's like, I feel like if you want to be in the space, right, you should be at least a little bit self-driven and be able to go educate yourself, and you shouldn't need traditional education to teach you something like that. And it's probably an inefficient way to teach you anything, right? Literally, all it takes is like 30 minutes in YouTube to get a basic understanding. And I think education in the current education system is vastly overrated.
Yeah. Speaking of things that move slowly, I did want to get your thoughts on crypto regulation. I think one of the big, I think education, government generally both move pretty slow. And obviously, there's a lot of chatter right now as to whether these kind of assets should be treated as securities. Electing the right people in power and educating them on crypto, and it's become such a big part of our world. A lot of people think it's necessary. What do you think about crypto regulation and the right way forward?
Yeah, I mean, I've been spending a lot of time here over the last, I'd say, year or so, understanding that regulation is coming and that it's up to us to push for the right regulation, right? It's the people currently advocating for it each have their own interests, and it's up to us to advocate for the interests of DeFi, right? So figuring out the right path to doing so involves supporting certain political action committees that are being active on the Hill and just across everywhere. And then secondarily, the biggest thing that we as individuals working in DeFi can do to support regulation is to use DeFi for good, right? And show how this isn't just like a 10,000 person video game where we're all just making each other money, right? But how we can actually use this technology to impact people's lives for the better, right? And I think if we can show, like, look, we made 1 million people's lives 10% better because of the technology that we've created, then obviously regulation is going to follow that and want to embrace that. But the thing is, we're not in a position where we can say that, right? We're not in a position where we can say crypto is helping people today, right? Obviously, we would like to put it there, and that's why we did the autonomous philanthropy machine, and that's why I think charity is so important, is because it actually helps drive that narrative. But I think that there's so much more that needs to be done there because crypto right now isn't cutting it in terms of actually helping people.
Yeah, that makes a lot of sense. I know, especially like my parents, and it tends to be the older generation. Obviously, there's outliers wherever you see it, but see what's happening and say, "Oh, those crypto kids, they don't know what they're doing," things like that, and that needs to change. But um, I was wondering. Obviously, you're here in LA. I'm sure you've traveled to New York, San Francisco. Do you think like where you build matters?
Not at all. Like we built Rari Capital completely remote. I hadn't like I built it with a bunch of high school friends, but I got introduced to them after the quarantine started, right? We started Rari Capital basically the day that quarantine started, and I only met some of my team like months after quarantine had ended, right? So like I don't believe where you are should impact at all your trajectory in the space. Obviously, it has like like where you are impacts like the amount of resources and everything that you do have, but once you reach like a certain level of like, okay, I can live my life and explore things online, like it doesn't matter where the hell you are.
Can you tell us a little bit about the founding story of Rari Capital and how that started, how you found the team, and how you got your initial, batch of, I guess, customers, or we don't really like to use that in the Web3 space. So I guess people to use your product and interact with it.
Yeah, community is what you're talking about there.
There you go. Community is the
uh,
word I was looking for.
Basically what happened was like I came up with this idea for the yield aggregator, right? And I was like, this is gonna be important. um, Called my friend Jack, who I had built this mobile wallet with, or he joined after a few months, and I was like, hey Jack, you wanna try this thing with me? He's like, okay. And then we needed somebody who was gonna get deep in Solidity, and before we tried to hire this guy David Lucid to our company My Crypto, and our boss said no. And David was a beast, and he was this 19-year-old kid who grinded out like the coolest thing in literally under a week. So I was like, that's the guy I want to be able to work with. So it was we called David, told him about it, and David was like, hell yeah, I'm in. So I guess the rest is really history from there. It started with the three of us. We were able to expand the team to just a bunch of people from our high school, working development, doing community stuff, et cetera, et cetera. We got extremely lucky, to be honest, to put together such an amazing group of people now who have all moved on to do the most amazing things individually. And then the early community was really driven by like just being extremely aggressive. Like we incentivized people on our team who had no DeFi, no crypto, no Web3 experience, and I basically told them each person who you bring in, I'll give you $10. right? And they had to bring in a certain amount of capital, each of those people, but it was incentive schemes like that where these people were just grinding, and we had all day because we were just in quarantine, so they could spend all day on just bringing on board like one or two customers, making a few bucks here and there, and it all paved the way for the early Rari community, which only continued to expand as our product line expanded.
What are your thoughts on DAOs? Is it the future? Is it what it's like kind of getting hyped up to be? Is that the next big thing to move?
I don't think so at all. I think DAOs are completely overrated, and most of them are BS. Most of them are like three people calling themselves a DAO, but really all it is a group chat of people trying to figure out what the fuck to do. Um, Realistically, like the only DAO which I really look up to, and that isn't to say doesn't have its own problems, because it's plagued by problems, but the one that I really respect is the Maker DAO. Um, they've done something really special, and they're the only DAO in this entire world who's actually like spending on growth, spending on team, spending on employee retainment, and being able to do so at the DAO level is extremely powerful. So they're at the top of my list. So I think it's possible to build a very strong DAO. I think most people don't understand what a DAO is when they start a DAO. I think most of them just think that it's a multi-sig with a group that makes decisions, and suddenly they get alleviated of any tax and legal concerns. That is not the case, right? And I think that alongside regulation and people just in understanding what the hell is going on, people will get rid of that notion, and hopefully we'll start to build stronger and better DAOs. But at the end of the day, I also think we should be building governance minimization, and that we shouldn't be focusing and just outsourcing anything we want to do to the DAO, and instead we should be building succinct and proper systems from day one.
I believe it or not, I was literally just talking to Josh before you got on, like seconds before. I read this interesting article about how I forgot the stat. I'll edit this in, but I think it was something like 90% of the voting power or something is controlled by the 1% or something like that, which certainly is an interesting problem, and it kind of parallels the real world, which is governance tokens are just freely traded. That's one of the great things, or the great things is you can buy governance tokens, and that's certainly a problem that I haven't quite seen solved yet.
Yeah, I think Vitalik has a lot of great writing on just like token governance and how it's just a ton of BS and it's just the easy solution for most people.
Zane, any more questions?
Yeah, I think we're right at the 30-minute mark, so we'll close it out here. Jay, thank you so much for joining us today. We really appreciated your insight. I'm sure people will appreciate this and what you have to say. If there's anything you want to leave us with, feel free. Otherwise, we'll close it out here.
No, I think we're good. Thanks for having me.